Welcome back, everyone, to the program. As you can see in the corner, it's Jeff here. We're talking history again. This is the gold standard revisited or defined, or the history of the gold standard as told from a financial perspective. Now, I'm big on history, and I studied history a lot. I remember a lot, 2 years of American history when I was in high school, and then followed by Western civilization. It was interesting how they broke that up. They would teach you American history, then they teach you European history, but they wouldn't tell you too much about what was going on in the whole world at the same time. So that's where we're going to get. I'm going to use this whiteboard here, which is blocking out my nice backdrop here. This whiteboard is going to be crucial because we're going to be doing timelines. As you can see, I started the first video, which I'm going to post back up here as part, and it's going to be in the series. I think it's going to be several parts. But this next video, we're going to take you through just past the Civil War in the United States. So we're going to go out to 1871. But in the last video, I went to here, which is where the Peel Act was. So that's the Peel Act. The Peel Banking Act, I believe, is the actual full name. And if I look off in the distance, I have some notes that I'm keeping track of so I can try and get as much in here as possible. I'm not going to go too much over this. That was mostly in the first video. But the Peel Act was launched in 1844. They repealed it in 1847. This basically said, where you have to redeem gold for silver. I'm trying to watch the glare too. Let's see. Yeah, that's a little better. So let's stick with the timeline here and let's go forward. So now 1847, England, who's technically been only on the gold standard officially since the Peel Act, lasted 3 years until they had a crisis. They said they were coming off, and they stayed off the gold standard pretty much at that point because no one challenged the banks to go and say, do a run on the banks. Kind of happened in the past, yes, and banks did fail. That banks have failed over time. But as far as testing the actual gold standard, the closest was the Peel Act. And it was an interesting story to dig into that. But now we go, so they suspend the gold standard essentially at 1847 by suspending the Peel Act. So now we move forward. Now, United States. Okay, so now we're going to go out to 1871. All right. Now, the big timeline in here is the Civil War. And if you can't remember this, I always remember this little jingle. And let's see. In 61, the war begun. So we go 1861. 62, they were halfway through. 63, the slaves were free. 64, they fought no more. 65, Lincoln died. So we know the Civil War was 61 to 65. That's the time frame. So that's the U.S. Civil War. And during that time, England and France were supporting the North and South because it was really an economic war. It was not a slavery war. It was an economic war. The North had a lot of industrial capabilities, a lot of factories. The South had cotton and a lot of crops and a lot of raw materials. So Europe took, again, England and the United States. I might say this in an earlier video, but I'm going to say it again because it's important. I view that the England and the United States, it's like a bad relationship. Okay. They broke up in the 1770s. Okay. The US said, we don't want you anymore. We're through. Have a nice day. I'm moving out. Okay. We should live across the pond. About 40 years later, War of 1812, Britain tries to get the United States back. 40 or 50 years later, they're backing one side of the US to try to get more control. And then they actually got control of Washington, D.C. in 1871, but that's a different story. We're not going to go into that. We're focusing on financial history right now. But it continued on and on and on. And we will talk about that as we move forward all the way to virtually present day. But we're going to focus on the Civil War. Civil War started. It was an economic war. The North and the South were fighting. And let's see. I'm trying to remember. Let's see. There were a couple acts in there, not that big of a deal, but basically France and England are making loans to the United States because they need to finance the war. War is costly, and it's for those who control the currency. It's profitable because there's a lot of expenditures and a lot of things that need to be done, as we'll see as we get to the Great War and World War II. So after this happens, right? The U.S. tried it. Lincoln tried to do a greenback. They tried to back the currency in a different way. Didn't work well, but after the 1860s, they became a phase of Reconstruction, which we'll talk about next. But a couple of years after this, Germany, the Germans adopted the gold standard in 1971. After that war was done, after the things had settled out, we kind of saw where commerce was going. We saw the incorporation of DC and London. Germany adopted the gold standard, and that's when I think it was the classical gold standard really started. It's like it started actually in 1880, but that is really the unofficial start, was when Germany in 1871 joined on and became part of the gold standard. So other things that were happening, so like other characterizations. So right now, England's trying to settle out the gold standard. Well, now between 1847 and 1861, right, is 1849. That's the California gold rush. That's where the U.S. discovered a whole bunch of gold. They went to California and other states, Nevada with a bunch of silver, started panning for gold and silver and digging for a lot of gold. Lots of wealth was discovered. Lots of people went broke too and died. It was like the Oregon Trail, all that good stuff. But the California gold rush happened, and also in Australia, there in the 1850s was a gold rush. So we don't talk much about Australia much, but they were a British colony too. So now you have two former British colonies that are gaining a ton of wealth by discovering gold. The United States, and 2 years later, in 1851, I'm reading that weird, but 1851, that's when Australia, not to be confused, interesting abbreviation, gold. So a gold rush in Australia in 1851. So now you have California, and you've got Australia in 51 and 49 between the Peel Act and the Civil War. So there's lots of gold that's happening here. And there was pressure. England was feeling pressure because now that you're getting less and less dominant in the gold that they hold, and the British currency starting to be challenged because the U.S. is gaining power. The Australians are gaining power because their economies are growing. Now, as we get past the Civil War, we get to start into a phase called Reconstruction. Reconstruction is kind of a blanket term that's thrown over like reconstructing the U.S. and putting it back together. That's how many people view it. But it's also reconstructing the economy. Now, after the Civil War, there's a lot of industrialization, a lot of factories built to support the war effort in the 1860s or right before then, because it was the Industrial Revolution. After the war was over, they were converting that now to production of things, goods, whatever, and also making things less expensive. When you make machinery and we make things more efficient, the cost of the goods go down. Now, there was no central bank at this time. The last central bank. So the first central bank in the United States was from, let's see, I think it was it was early. It was a 20-year charter, and I think it was 1781 to 1789. That was the first bank, but it was before the U.S. Constitution. So that one technically doesn't count. The first one that counts was 1791 to 1811, and that was a 20-year charter of a central bank for the U.S. That was eventually shut down. They didn't renew that charter, and then there was the opportunity for the War of 1812 for the Brits to get back involved and say, "Hey, the U.S. don't have a central bank. They're going to have an economic issue. Let's go after them." Or they're just getting out of the central bank. We want them to be in a central bank. We want to be involved, and they started going after them. So that was part of the War of 1812. Again, the jaded lover 40 years later going back after it in another generation. Then comes the era of Andrew Jackson. So this is 1816 to 1836. So I'm boxing that in there about right. All right, it's between it's in here, right in here. Okay, that is the second central bank. This is the first in the United States. Again, 20-year charter. Andrew Jackson hated it. Hamilton loved it. There were warring factions all the time between like leadership, but who wanted central banks, who didn't want central banks. Andrew Jackson, much like our 45th president, was fighting constantly to try to win election. There were challenges to his election. There were some that said that he won, but he lost, that sort of event. And then he got back into there. And then like one of his dying actions before he passed away was that he killed the central bank. He let this expire, did not put out a second central bank. Sorry for the glare. Let me move this. I'm going to try and fix that in the next video. But yes, the first central bank, that's the first central bank there. The second central bank is here in 1816 to 1836. And then, the U.S. doesn't have a central bank at this point. Now, with England establishing the gold standard right after this, they're like, hey, we're the World Bank. We're the ones that will settle everything. We have a gold standard. Trust us. And 3 years later, like, not so much. But 25 years later, now we're in the Civil War, and it's expensive, so they're getting loans from England and France. Then after this comes Reconstruction, and there's a big push by several people that wanted another central bank. But what happened was the actual, I'll get into that in the next video, but this was actually the most prosperous time for the United States from the period of Reconstruction. They don't teach you this that much, but with no central bank and a lot of industrial production, it created a deflationary pricing event so that people, even if they made the same wages, they could afford more because prices were going down because it was more efficient. So that was the most that period of time from 1870 to 1900 is probably the best economy in the history of the United States. But it's not in the history books that they teach you in school because they don't want you to know that because central bankers are involved. So that's enough for this video. I'm going to go past 1871 in the next video. We'll clean up the lot. I think we'll keep this angle. We'll clean up the lighting. We'll do a new timeline from 1871 to 1913, somewhere around there, around World War I. We'll go there next. But lots said today. I would love to get your feedback on this video, something you learned, something you have a question about, something you'd like to know more about. But this sets some context of not just American history, not just European history, but how it's all combined and intertwined for a 60-ish year period where England wants to get back with the United States over and over again. So that's enough for this one. I'll see you in the next video where we talk more about the gold standard as we head towards the 1900s.